is there going to be a moment? Do you believe that private companies have been properly marked by you and your peers at the moment?
Well, private marks, I think, have been fairly accurate based on last couple of years or so. They haven't been wrong. Now, all of a sudden, the market's gone down, so I suspect you'll see marks coming down. I don't know how much down they'll be, but the marks will not probably be as robust as they've been the last couple of months. I don't think that will happen.
Right.
But nobody knows for certain.
No, the reason I ask is there's a view that maybe that the marks haven't come down, and when those marks do come down, that there's going to be even more companies that are going to, or funds, especially in the hedge fund space, that may have to either liquidate or do other things to actually pay for.
Well, hedge funds come and go more frequently than private equity firms. Hedge funds are much more volatile, and venture capital funds have had some great run-ups, and I suspect they'll have some big declines as well. The private equity firms probably are not as volatile in terms of their marks as the venture firms or the hedge funds.
Right. What about the big funds? I'm thinking T. Rowe Price or BlackRock, not Blackstone, but BlackRock and the like, who have gotten into private investments over the last several years. As things come down, do you think that dynamic changes?
Well, they are not doing deals directly. They're basically investing in other people's deals, and I think they'll probably do that. But that's a small sliver of what they do. For T. Rowe Price and BlackRock, their business is really a different business completely. So it's a very insignificant part of their business overall.
And then finally, you lived through the 70s. You were a Carter guy, so you know this. Do you think this is the 1970s? Do you think this is 2001? What is this to you, having been around the block a couple times?
This is not the 1970s. The U.S. economy was much more insular then. The labor force was much different. 25% of the workforce then was unionized. That's not the case now. So I don't think it's the 1970s, but it is a real inflation. It's not something that's just transitory, as we once thought it was. So I think it's not as serious as what we had in the 70s in terms of high inflation and high interest rates, but it's something we have to take into account and make sure we really are dealing with it. And I want to congratulate you. Normally, when I'm on your show, you are wearing, you're rolling your sleeves up. That's in a studio. Here we're outside, and you're in a coat and tie, so I'm very impressed.
I got in a coat and tie for you.